On Wednesday, nat gas prices experienced a decline due to downward pressure caused by a recent 3% drop. The decrease was driven by forecasts indicating reduced demand over the next 2 weeks. Surprisingly, the price went down, even though there were preliminary drops in daily output and predictions of hotter than normal weather persisting through mid-August, particularly in Texas. Moreover, Europe gas prices rise as maintenance curbs Norwegian supply. Also, Algeria's Sonatrach and Saudi Arabia's Aramco have raised official selling prices for liquefied petroleum gas in August by 18 to 39% from July, amid rising oil prices and limited global LPG supply. Gas flows to the 7 big U.S. LNG export plants rose to an average of 12.7 billion cubic feet per day in July, up from 11.6 billion in June. That, however, was still well below the monthly record of 14 billion in April due to ongoing maintenance at several facilities. Average gas output in the lower 48 states rose to 101.7 billion cubic feet per day in July, up from 101 billion in June, but just shy of the 101.8 billion monthly record set in May due to pipeline maintenance earlier in the month. On a daily basis, however, output was on track to drop by 2.8 billion to a preliminary 2-week low of 99.9 billion cubic feet per day on Tuesday. That would be the biggest one-day decline in output since December. With more hot weather coming, U.S. gas demand, including exports, would rise from 106.1 billion cubic feet per day this week to 106.9 billion next week as power generators burn more of the fuel to meet rising air conditioning demand. Nat gas sentiment is bearish as prices struggle to gain momentum. Furthermore, the price is below the 50-day moving average at $2.59, reinforcing the downward pressure. Traders should closely monitor the main support area at $2.50 to $2.52 for potential reversals or further downside movement in the natural gas market. It is highly probable that the market will continue to experience considerable fluctuations as it forms a substantial basing pattern, indicating an imminent turnaround. Ultimately, the market is likely to push towards the significant psychological level of $3, which holds significant importance and impact. Should we gather enough momentum to surpass the 200-day moving average, it would create an opportunity for a potential advance toward the $5 level. I find this scenario quite achievable and believe it could materialize later this year. At this point, it's worth noting that larger firms are collecting natural gas ETF markets as well. Thank you for watching. Please like, subscribe and hit the bell. Stay updated with our latest content. See you in the next video.